fresh jitters about stock markets after disappointments from Wall Street giants Amazon and Alphabet. Latest setback for the high-growth tech sector. And further woes for Google as well, as the company reveals it's fired dozens of employees over sexual harassment, including 13 top managers over the last 2 years. Hello, welcome to World Business Report. I'm Jamie Robertson. We're also going to be looking at the latest GDP figures from the US, which are important. First, let's have a look at the tech stocks, because Amazon, Alphabet, Google's parent company, of course, have both seen their share prices tumbling, wiping hundreds of billions off the value between them. That's because of what was seen as disappointing financial results out overnight. It didn't look that bad, but very much in comparison to what people were expecting. Amazon said it expected sales for the crucial Christmas period to grow by only 10 to 20%. Most people, that would be fantastic, but actually it was below expectations for the market. Seen Amazon's share price down around 8% at the moment on US trading. Alphabet, well, its revenues rose $33.7 billion. That's a 21% increase. Again, a very impressive figure, but still below forecasts. Share price is currently down around 4%. The Nasdaq, which of course is dominated by the tech firms, has been outperforming most of the year until now. October has been the worst month in almost a decade. So, is it a warning of further disappointment or just a slight correction? Sean Port, who is Chief Investment Officer at investment management company Nutmeg, gave us his views on this result.
They are delivering really good results, but investors have very high expectations. So the main problem with the earnings is actually fourth quarter guidance from these companies has been quite poor, particularly from Amazon. So its investors have got very high expectations, and actually these stocks are very much priced to perfection. So if you look at earnings this year, we're talking Amazon being priced at 90 times earnings for this year. Even for earnings that are expected in 2020 after strong growth, Amazon's priced at 47 times earnings. So investors really have baked in these high valuations based on expecting very strong growth to continue. But it's not just about the retail business now, it's their business-to-business services, which also are improving. And we saw a slowdown in cloud sales from Amazon as well in the third quarter. Clearly, there's going to be more regulation for big tech coming from the US and indeed from Europe. I think it's a direction of travel. It's very hard for analysts to actually price in what is the impact going to be on companies like Google and Amazon. So it's something that's coming against them, but they're really, really focused on what is happening. What are the companies saying about their sales in the near term? I certainly think that market sentiment will improve over weeks and months to come. When we get these big spikes in market volatility, they take a while to work through the system, and then investors calm down somewhat. Look at the headline numbers. What are the revenue numbers that they're producing? I think what's really important from our perspective is that margins from these companies are going up. 40% plus margins in these tech companies, which suggests that they can continue to produce really good earnings, even if sales are starting to disappoint.
Now, let's just stick with the tech sector, but look at it from a different angle, not so much its financial performance. Silicon Valley has got a reputation for being a particularly difficult environment for women. Google revealed that it has fired now dozens of employees, including 13 top managers just in the last 2 years. It comes as a New York Times article reported the Android creator Andy Rubin was given a $90 million payout, though he has actually denied this. Digital technology expert Yvonne Bortoletti spoke about the revelations.
Things like this don't come as a surprise, especially because we see stories about harassment and abuse, especially because they're related to power. We see this everywhere across all businesses, in politics and Hollywood and everywhere. So of course, sadly for us women in particular, it's not as a great surprise. What is a surprise to an extent is the scale of it within Google, and the massive payout, the culture that has been revealed by the New York Times, and once again the fact that this company is putting reputation above the moral good and what's the right thing to do. And they've done it in other circumstances in the past, but the scale of it, I think, is quite surprising. The CEO of Google has done the right thing. He said, I'm dead serious about it. And of course, not everybody in the business, so they would have wanted on purpose to create this culture, but that's what they've done. This is what the result is. And this is particularly dramatic for a company like Google that has so much influence over our life, all the data that they have and they own, they take about us. So it's a company that makes of ethics quite a big word for them. You know, they just published their ethical framework governing their use of algorithms. So this is a company that says we are ethical. And of course, that does raise some questions. Now, in terms of women, yes, of course, we do have a problem. We do have a problem with women wanting to go into technology. So we do need to see real, strong and serious action coming out of this to make sure that we do encourage our younger generation of women to go into technology.
Ivana Bertoletti there. Another market-moving story today, GDP figures out in the United States for the last quarter. It is the value of everything the country produces, of course. The previous number was very high, 4.2%. That was for the second quarter. The third quarter, not quite a bumper, still pretty good, actually, 3.5%. Well, joining me now from New York is Kim Giddleston. These figures are, better than we expected. Expecting 3.2, we got 3.5. It's all looking great, but the markets don't like it at all. They're just determined to fall, aren't they, at the moment?
Well, of course, Jamie, the U.S. stock market is not the economy. We like to say this over and over again, and this basically proves the point because there's nothing really bad in this GDP report. In fact, there's a lot to like. American consumers spent way more than we were expecting, 4% in the third quarter. We also saw that while net exports were a drag, obviously the impact of retaliatory tariffs weighing on American exporters, most other things that contributed to this report were quite good. Government spending also increased. So we also saw that prices weren't rising at the rate that many had been expecting. All of this together should paint a picture that would please investors. But as you mentioned, there are other things that are weighing on them, particularly when it comes to third quarter earnings season here in the U.S.
Yeah, well, what particularly would you pick out of all those things that amongst the tech stocks, Amazon, Google, scandals at Google, or do we talk about things like, the trade wars and all that sort of stuff as well?
I think it's a mix. I mean, we talk a lot about a good economic report, but of course that's backwards looking. That's telling us how the economy performed in the in the third quarter, of course. What's worrying investors is what will happen in the future, and there's a lot that's concerning them in these corporate earnings. We saw yesterday that both Alphabet, which is Google's parent company, and Amazon lowered their sales forecasts for the fourth quarter. That's concerned investors. There's also, of course, as you mentioned, the rising interest rates that are happening here in the U.S. That has led to many concerns that corporate profits might be impacted by the fact that businesses here will have to pay more to borrow money. And then, of course, you're right. There is the impact of that trade war, of those tariffs. That's made it more expensive for many businesses to buy goods. In fact, in that GDP report, we saw that business investment was significantly lower in the third quarter. And all of this together, well, that's made many investors worried. Okay.
Kim, thanks very much indeed. Well, let's have a look and see how worried they are. We'll actually have a look at the numbers. The magic will produce it. Dow down 1.5%. Yes, not as bad as it was, down to almost 2% about 25 minutes ago, so it's recovered a bit. But the S&P 500, much bigger gauge, of course, of what's going on in the economy, down pretty much 2%. NASDAQ down 2.75%. Really hit the tech stocks, really being hit very badly there. Over here, this side of the Atlantic, FTSE's not liking that at all. I remember FTSE dominated by global stocks as well, with global, really feels the effect of any worries about global slowdown. And I think that's very much what is affecting the US market at the moment. DAX down 1.5%, CAC down sharply as well, 2%. And the pound against euro, pound stable, but still on the weaker end of its range over the last few months. And that's it from World Business Report. Thanks for joining us. Goodbye.